What's going to happen is the Fed will next move might be to no change in the Fed funds rate,
Yeah.
and then they'll start lowering rates. And when the problem for gold is because it doesn't bear interest, it has to compete with interest-bearing assets like bonds, and so when bonds interest rates go up, that's bad for gold. But gold has done pretty well here in the last 15 months, even though the Fed has been raising interest rates. And I think what's going to happen is that when the Fed decides to lower rates, that takes all the pressure off of gold and it's going to skyrocket higher.
John Doddy, a former economics professor and gold stock analyst at Stansberry Research, has always been wary of politicians and their penchant for making inappropriate and unsustainable policies just to pander to voters. It is this innate distrust of politicians and concern over their rapid debasement of the dollar that first drove Doddy toward gold, and he has never looked back. According to the former economics professor, the only path forward for the Federal Reserve and the Treasury Department in 2023 is for the printers to come on again. Doddy believes that's the only way we can postpone the impending doom and avert any immediate crisis for the United States economy. While turning on the printers would have some more long-term effects on the economy, it's great for gold investors, as the leading precious metal has always performed well during periods of quantitative easing. That's why Doddy is predicting a 50% increase for gold as soon as the printers come on. Doddy makes this prediction during a recent discussion with Stansberry's Daniela Cambone. According to the renowned gold analyst, the yellow metal is about to have some massive price gains, which could see it trading at around $3,000 from its current price below $2,000. Though Doddy does not believe this would happen overnight or even in a month, he believes it would be preceded by the Fed finally admitting defeat and not only pausing its rate hikes, but outrightly reducing its benchmark rate to avoid setting the economy on fire. During the interview with Cambone, Doddy also gives his views on gold's current price. Many precious metals investors believe the asset's price is being heavily manipulated to keep prices down. But Doddy wants investors to focus on the metal's long-term trend, which he says has been trading higher since President Richard Nixon took us off the gold standard in 1971. We will now bring you clips from Doddy's interview, as he also discusses his thoughts on gold mining stocks, de-dollarization, and silver, which he says will go crazy after gold takes off. Please watch the video to the end, subscribe to the channel, and turn on post notifications for more videos like this. Also, ensure you drop your comments and observations on Doddy's interview in the comments section below. Everything you do helps with the YouTube algorithm and helps our videos reach more viewers. Thanks for the support and enjoy the video.
Point that I continually stress is that nothing's really changed in the big picture, that the Fed is creating inflation, and the Treasury is creating inflation, and long term, just as it's been for the last 52 years, gold is going higher. Gold, since it was set free in 1971 by Nixon at $35, gold now around $2,000 an ounce. That's an 8% compounded annual gain. There's no investment that I know of that's not interest-bearing that has that kind of return. So, just sit in your gold and hold on to it and ride out these little ups and downs. They'll come, but the overall long-term trend is higher. It's really the big picture that the yield curve is inverted, that long-term rates are, which is supposed to be higher than short-term rates because your money is tied up longer. The long-term rates are below the short-term rates. So there's some fear about what's going on in the short term here. I guess that might be related to the debt negotiations. But I think that the big factor that nobody knows about is, in a way, it's 2008 all over again. The banks are loaded up with bonds that are way under that the value is way under what they paid for it. Bond prices were low for a long time, or high for a long time, because interest rates were low. And in the last 15 months or so, the Fed has jacked up interest rates, and what that has done is lower the value of the bonds. And that's what caught Silicon Valley Bank and ended their life, because the people wanted their money back, and the Silicon Valley had to sell their bonds in order to get money back to their depositors, but they didn't have enough because the bonds had gone down in value. Bonds can be held by two different ways by banks. They can be held in their accounts as held to maturity, in which case it doesn't matter what interim price change might be, because the bond is going to be held until it matures and you get the $1,000 back. But that's only if depositors don't want their money back. And Silicon Valley ran into the problem of depositors wanting their money back. They had to sell bonds, and they sold them at a loss, and that snowballed and killed the bank. This whole problem is really a problem of all banks. All banks are underwater in terms of their bond holdings, just like they were in their mortgage holdings in 2008. And the Fed bailed them out with 8 years of QE, and the QE will ultimately bail them out on this too, this round too. We just don't know when that's going to start, although I expect it will be soon. What's going to happen is the Fed will next move might be to no change in the Fed funds rate, and then they'll start lowering rates. And when the problem for gold is, because it doesn't bear interest, it has to compete with interest-bearing assets like bonds, and so when bonds interest rates go up, that's bad for gold. But gold has done pretty well here in the last 15 months, even though the Fed has been raising interest rates. And I think what's going to happen is that when the Fed decides to lower rates, that takes all the pressure off of gold, and it's going to skyrocket higher. I've said I expect to see $3,000 gold, and I still expect to see that, but in the next couple of years.
If gold were to hit 3,000, where do the mining stocks go?
Oh, they're going to double from here at least. Even the doggy ones are going to double from here, but the best ones are going to go up 3 or 4 times. We have a top 10 list, and our top 10 has some large companies in it, some not the biggest ones. We don't have Newmont or Barrick, but there's still big producers in the 2 million ounce a year range, and we have smaller companies and intermediate sized producers in the 500 to a million ounce a year, 500,000 to a million ounce a year range. And this is kind of a barbell approach that you have the stability of the larger producers and the royalty companies, and you have the explosive potential of the little companies. But they're not little in the sense that they're explorers. They're little in the sense that they've got a deposit, they've done a feasibility study, and they're either building it or they're doing the financing for it or something. So they've already been vetted right. By the market and by their independent advisors that there's something there. We know the ounces are there, and it's not a lottery ticket like an explorer.
Doddy expects gold mining stocks, and silver to really take off after a much-awaited Fed pivot. However, there's a longer-term trend that is currently being debated in the global investment sector. It is no other than China's de-dollarization agenda, which is now rapidly spreading to the rest of the world. Last month, Brazil President Luiz Inácio Lula da Silva urged developing nations to find an alternative currency to the dollar and stop the greenback's dominance in global trade. During a state visit to China, the Brazilian president was reported to have said, "Why can't we do trade based on our own currencies? Who was it that decided that the dollar was the currency after the disappearance of the gold standard?" President Lula also called on the BRICS nations of Brazil, Russia, India, China, and South Africa to establish a common currency with which they could transact. That decision has been so attractive to other countries that at least 24 countries have asked to join the alliance in only a few short weeks. Let's get back to Doddy's interview as he discusses de-dollarization and his bullish predictions for silver.
Well, I think it's coming, but what period of time? The dollar has been the reserve currency since the First World War, so it's 100 years now, and probably another 100 years or another 50 years, it'll be something else as the reserve currency. Probably the yuan, I don't know, but it's not coming fast. It's nothing anybody has to think about as a flood that's going to come and disrupt their total financial well-being in the next year or two. It's like the story about you put a frog in the water and you heat the water and ultimately you kill himself because he doesn't know enough from the warming water to jump out. But I don't think that's going to be an issue for us. The world still does transactions for the most part in dollars. And until that changes, and there hasn't really been, the euro was heralded as being the next dollar replacement, but that didn't work out. And will the yuan? I don't think so, because the yuan doesn't have enough trading in other currencies, and with the U.S. And China having sort of a tepid trade war, I don't think it'll happen very soon. Silver is gold on steroids. After gold gets going, and people start looking for the next big thing, silver takes off, and it doesn't go the other way around. And silver doesn't lead gold; it's always gold leading silver. And I think it'll happen. Silver is $23 an ounce, and right now, and it's been over $20 for probably a year or so. But so when gold sees 3,000, silver will probably see 40 or 50.
Doddy's concerns about the US dollar and other fiat currencies are shared by many other renowned analysts and veteran investors. Despite being the world's reserve currency, the dollar has lost about 99% of its value since 1913. The previous decade's rapid debasement has been insane, but it might not even begin to scratch the surface of what is to come if the government continues on this path. Even the Treasury Department admits that the United States is on an unsustainable fiscal path. What are your thoughts on John Doddy's interview and price predictions for gold and silver? What are your short and long-term predictions for gold and silver? Please drop your predictions and comments in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos. Thanks for watching.